Here's a development that symbolizes America's increasing sway over the global oil market. Dated Brent is the world's benchmark for crude, and it's about to be transformed. Dated Brent determines the price of millions of barrels of transactions every day, but it's becoming less liquid. S&P Global Insights, Commodity Insights, better known as Platts, says West Texas Intermediate is now going to become one of the handful of grades that sets dated benchmark. We're joined by renowned author Daniel Yergin. His latest book is The New Map: Energy, Climate and the Clash of Nations. Daniel, thanks very much for coming on the show.
Sure, Andrew. Thank you.
I know this inclusion of WTI in dated Brent is kind of technical, but can you give us your thoughts on that, please?
It's technical, but it also shows, as you suggested, the vast change in the global oil market, because dated Brent is the price by which up to 2/3 of world oil is the price is set. And it's been based basically on North Sea crudes, which go back to the 1970s, 80s, and 90s. But it doesn't recognize the fact that now the United States is the world's largest oil producer, and the importance of North Sea crudes are going down. So what you're now doing is saying that this price, the dated price, which again so much is measured, will now also include something that's not from the North Sea. It'll include West Texas Intermediate, Midland as it's called, and it just reminds one now that the U.S. is the world's largest oil producer, and what happens in the U.S. oil patch has global impact.
Is it likely to mean stronger prices for WTI, or are things not that simple?
Well, I think it will certainly put even more focus on it and more attention on it. I think it's going to be a complicated mathematical procedure to sort of incorporate West Texas into it, because they're going to have to adjust for freight rates and everything. But it will be, I think it will mean that the price itself will be more meaningful and significant, and in a sense will have stronger foundations.
I'm so happy you've come on the show. Please give us your thoughts on the changes over the past year in the global oil market after Putin's brutal attack on Ukraine.
Well, I think what it did is that already the world was in an energy crisis before, 6 months before the markets were already tightening. What it's done is it's put energy security back on the table. Europe forgot about it, happy to depend on Russian natural gas. The U.S. forgot about it because of shale. The Asians didn't forget about it. And one of the things it does is it highlights once again the importance of Canada as one of the world's major oil producers and a secure producer. So that's one of the big changes. I think the other big change is the world oil market was a global market. It's now a divided market because Russian oil didn't go to India before the war. Now India is taking as much as 2 million barrels a day of Russian oil because Europe, the traditional market, is not there. And I think one consequence of this, Andrew, is that when this is all over, Russia is going to be still a major producer. It's no longer going to be an energy superpower.
But that's interesting. You think we're moving towards a bifurcated global market whereby China, India and Russia are forming a complex?
Yeah, I think exactly. And now, for instance, U.S. LNG, 2 years ago, the French didn't want to accept a cargo of U.S. liquefied natural gas because it was made with shale gas. Now, we just had our conference in Houston, and we had all these Europeans there looking for U.S. LNG. I think U.S. LNG is now going to be part of the energy security foundation for Europe. That's a big change. And I think it also points to the question of whether Canada is going to become, to a degree, it will become an LNG exporter as well.
Domestic commentators say that we have been crippling ourselves as an oil power. People are critical of the carbon price and the difficulty of building pipelines. Do you think I know you probably don't follow day-to-day Canadian politics closely, but do you think Canada is shooting itself in the foot?
Well, I think that Canada has a tremendous role to play in energy markets. And by the way, let's say if Canada is an exporter of LNG, that will reduce coal, and that will have a much bigger impact than some of the other things that are being done in Canada on a global basis to reducing emissions. So I think Canada is, by not being more integrated into the global market, is hindering the impact it can have and the contribution it can make to global energy security.
And just finally, the Saudis, where do they fit in all of this? I mean, we have heard that OPEC's power is increasing. or has increased over recent years. Of course, that could predate Putin's attack on Ukraine. But where do the Saudis fit into the mix now?
One of the things in the new map I write about is the emergence of OPEC Plus, which is really led by Saudi Arabia and, interestingly, Russia. I think the Saudis are very much, they're doing very well out of the oil price. And we've seen, for instance, the Chinese just brokered this deal for Saudi Arabia and Iran to establish economic relations. And I think the Saudis are saying we want to be a global power too, and we still have a strong relationship with the U.S., but we're going to have a relationship with other parts of the world. And by the way, China is their biggest market for their oil.
Daniel, can you leave me with a final thought? Are we anything near peak oil consumption, peak crude oil consumption around the world? I know that's a very involved and complicated question.
I looked at that very carefully when I was writing the new map, and my views remain the same, which is that the notion that people were generalizing during COVID about peak demand, you shouldn't generalize in the middle of a pandemic. I think that we probably go till the early 2030s before we see the peak in demand, and then it doesn't collapse, it sort of plateaus.
But early in the next decade, you think we could well see oil consumption going up above 100 million barrels a day, for example, into the next decade?
106 to 110 million barrels a day, and it will be driven by the 80% of the people who live in the developing world, not by the developed.